when they go to the new place, there's this new sense of urgency. And so maybe they work a little harder. So I think in our industry, specifically for realtors, and you can pivot by just maybe adding in some wholesaling, some joint ventures with, where you find good off market or on market deals for that matter. And you partner up with a investor where, maybe you get the buy side and you get the relist, or you get maybe additional fees from the buyer because it's a good, wholesale deal, or, a deal that makes sense as an investment.
All righty, folks, we are going to have a conversation about real estate, the housing market 2025. We are going to have the understanding that we may all have 7% or higher rates. It seems like only 3 or 4 weeks ago, the prognosticators were talking 5.5. That is now wrong. We are going to talk 7. And I want to talk to these guys who are in the business every single day and talk about winners and losers. And more importantly, we're going to start with what are they doing in their business? Because a 7% real estate market, right? Mortgage rates, cost of capital is very, very different than 5.5. So Ty, obviously we've talked every week for years now. I think the market you would have been playing with at 5.5% mortgage rates is vastly different than 7. I think you have to fundamentally change some of your plans, but maybe not. What are you doing, if anything, the fact that we may have 7% all next year?
So something we've talked about a lot on this channel is that we're going to see, 4 million plus or minus, maybe sub 4 million transactions and inventory volume is not coming back in 2025, folks. It's wishful thinking. And so, if you look at, we've got 1.4, 1.3, 1.6, who knows the number, million realtors. We're just realtors. Yeah. If you're going to survive, realtors are going to lose unless they make radical adjustments to really focus on now business. Investors, something I teach, something I've been doing for a long time, forever, probates, a lot of pre-foreclosures. You've got to work with people who need to sell, not people who are curious, interested, or, want to. It's people that need to.
Yeah. The thing that really, it's 7% is just a different game, because at 5.5, you will start to see the move up buyer unlock. It won't be a lot, but it will be some. Because again, if you're at 4.5 and you've had babies, or maybe you had twins, at some point you become a must buy. But you got a 4.5 and now it's a 7 or a 7.5. You're like, forget that. We'll put a crib in the living room or something, right? You're just not going to do that. So the real estate market, the move up buyer is still dead. It's frozen. It's not good. And that leaves you with only the must sells, the probates, the pre-foreclosures, the job transfers, the lifestyle changes. So again, we'll still we could do as low as 3.7, right? 3.65, 3.7 million transactions if rates stay at 7%. But let's go over to Mr. Matt, the mortgage guy. It seems like it was yesterday. You and I were talking about a refi boom, and we were talking about the phone is ringing off the hook. That's now dead and gone, right? Refi boom is not happening at 7. You'll still have some, but it's not a boom.
Right.
Purchases, at 7, hard, right? So, I think 7% impacts you as well.
Oh, 100% it impacts the mortgage market. And, that refinance boom, there's a lot of funny memes. There's some truth in memes, right? And so it's like 9/2 to 9/18, 2024, rest in peace. A 2-week refinance boom, and it's all over, right? But yeah, in 2025, the projections on the mortgage side are like 2.3 trillion in origination volume. The funny part is, if you go back to 19, 18, 17, the last kind of normal real estate markets before the craziness of 20 and 21, and then the slowness of 22 and 23, I looked at this data on an earlier call where in 24, the second quarter was like 429 billion in volume. Then you go back to 19, 18, 17, it's like 508, 461, 467. One thing to factor in, even if it's back to those normal levels,
Mhm.
If the loans are 30 to 40% higher because home prices are higher, then it's less like
Volume.
numbers.
Yeah.
And
Yeah.
so if rates stay higher for longer, there's not much refinance to be done. Sure, there's some people that need cash out. Sure, there's some circumstances, but like you're not going to see, a ton of volume. I think the number of total loan originations but not volume, but by numbers, like 6.5 million is a projection for 2025. I think if rates stay higher for longer, that number's lower and could be much
Yeah.
lower. Because to your point, if there's only 3.7 home sales and 20% of those are financed in cash, that's really
Yeah.
only 3 million loans. And so to have
Exactly.
another 3 million plus in refinance, that number gets it's tampered. And so, it'll be similar to what we've seen the last couple of years, really competitive on the mortgage side. Companies doing loans for next to nothing, going as hardcore spammy as they can with email, text, phone calls, servicers reaching out. And quite honestly, I had a great conversation on Friday. I'll say this till I'm blue in my face. This person called me because they knew I would be honest with them. And they kind of knew the answer was no. And of course it was no. They had to have me confirm it. But I told them, I said, if you reached out to a call center, they've got a loan for you. I promise.
Oh
Right.
yeah.
But based on everything we talked about, like, no, like this doesn't make sense right now for a number of, it was a clear no. And I
Right.
still know that a call center is going to tell them yes. So it'll be interesting to see too, because we've had a little bit of a cleansing on the real estate side, the mortgage side, because if you're not a great operator, if you don't add value to the market, you're out. And so,
Well, that was a question I wanted to ask you, because when I look at what you do in your business, even if we're going to do very few transactions, right, less than you would hope for, and there's no refi boom, you're probably doing more volume, because if we compare it to 2 years ago, there's like half. I think you lost like 60% of loan originators, right?
Yeah. So the number of like quote unquote active originators went from 350 grand or whatever it is. And now, wait, was it 240,000 that did at least one in a quarter? Now it's like 80. So it's down a
way off.
ton, and, but we'll see. The good news for the consumer is the ones that are left are good. And, this is part of the conversation I had earlier too, is that right now, when there's uncertainty and volatility, more important than ever, great realtor, great loan officer. So like our value in the market is that much greater, because it's like, how hard was it to say, yeah, I got 2.5%, 30-year fixed money. You want some?
Yeah.
Okay.
Yeah.
Sign on the dotted line. Off you go. Right now it's strategy. Ty's helping with strategy on the real estate side. Here's how we should submit the offer. Here's how we should structure this. Here's something that I think that you should add into the contract. On the mortgage side, it's here's what we might want to do, because we're facing affordability challenges, and, here's your monthly budget. And so in the higher rate market, I think you're right. There's less originators, and the value of the great ones is more in a tougher market where people actually make decisions. There wasn't a lot of decisions made at 2.5%. Just sign me up for that cheap debt. I want some.
Yeah. I want to go back to you, Ty, because one of the things that I've watched from afar, I'm not an operator in either of your business. I'm just a casual admirer of both your businesses. It looks like the mortgage industry has had a more dramatic cleansing of operators or originators. I think there's still a big cleansing coming to real estate agents. And if we have another year of sub 4 million transactions, it's just, it feels at some point, there's more pain to come. Am I missing it, or has there been more cleansing than I know?
No, there's more pain to come, and there's a lot of people scratching their head trying to figure it out. As an example, I have friends of mine who are still on the outside. They're still active, and they are still working in real estate, and they're doing some deals, but because of the marginal deal flow, they're supplementing, like doing like property management, going to work with, like in their brokerage, their company, the owner of the company also has to happen to have a property management. And so now they're doing some leasing agent stuff where they're making money that way. And it's a smart pivot, right? It's a smart, rather than leave the industry, keeps them in there. They're still really good with people. They can help do some property management things like that. I've seen people transition also where just looking for greener pastures. They'll leave a company and then they'll just go somewhere else. And here's what happens, I think, and I don't encourage that, by the way. I don't think that's necessarily the smart idea. It can be another big distraction. But what does happen is that when they go to the new place, there's this new sense of urgency. And so maybe they work a little harder. So I think in our industry, specifically for realtors, and you can pivot by just maybe adding in some wholesaling, some joint ventures with, where you find good off market or on market deals for that matter. And you partner up with a investor where, maybe you get the buy side and you get the relist, or you get maybe additional fees from the buyer because it's a good, wholesale deal, or, a deal that makes sense as an investment. So I think to stay in the business and be productive, you've got to add some other strategies and tools that revolve around the things I shared about investors, probate, pre-foreclosures, now need to versus interested want to.
Yeah. One of the things that I know you really care about is this hybrid agent, which is essentially what you just described. You put together a lot of material, training, advice. If somebody want to get a hold of that, it's really easy. You treat email like text.
Correct.
It's ty@tylg.com. A lot of agents out there maybe scratching their head, struggling. I know that Ty's been in the business 30 plus years. He will be a sounding board. He'll listen. He's a go-giver. So if you want any of that, you just want to talk, commiserate, ty@tylg.com. Matt, again, when I look at what's coming down the pipeline, I really think people need to be prepared, right? They need to know the numbers. They need to know what works for them. They need to know what options are available. They need to know what buy downs cost. Because again, I think in a buyer's market, which we're in, it's about turning every knob and lever to make the deal possible. What do you think?
Yeah, 100%. And that's why, having a great agent, having a great loan officer is vital. For the investor side, I think there's great opportunity to be had right now. One of the coolest stories I've listened to recently was in the school community, where, shout out to school community. If you're not in that, you need to be. Brand new investor. And I don't know if you guys caught it, but I think his day job is he trains people for ultra marathons and these grueling events. So he's like, I've climbed mountains, I've ran 100-milers. Nothing was as nerve-wracking as buying a duplex. But the coolest part about his story is relatively new investor, but knows exactly what needs to be done because of, I think, the interaction with the ORaaT community in school. He went out there and said 6% return is what I need in my market. So who cares what the market's doing? Who cares where rates are at? I need a 6% return. That one would only work if I paid $375. I offer $375. Won't take it? Cool. This deal only works if I pay $330. Offer $330. Won't take it? Cool. And then just like non-emotional, I'm an investor. Here's the return I'm looking for. I'm not going to, submit an offer unless I get my 6% return. And by doing the work, being around the right people in school, found it, got it accepted. But the thing that I thought was cool about that was the vulnerability, because everybody on their first deal is scared. It's new territory. It's big numbers. We're not talking about, buying a pair of shoes and you don't know if you're going to want to return them or not. Like, this is a big purchase. And so, I think that is something that investors need to duplicate, is like, just underwrite to your criteria and don't worry about anything else. I think over the next 3 months, more of those sellers are going to be able to bend and say, you know what, that's your number. I thought I could get more, but I'll take it because I'd rather not sit for another 75 days.
Well, that's kind of where I want to end on. I can only imagine two winners in 2025. Again, assuming we have 7% mortgage rates for the year, we have a whole bunch of losers. We have two winners. Number one, you've just described. It's the non-emotional investor who knows their numbers and writes lots of offers and follows up. Yep. It will be a numbers game. There's a video coming out today, Monday, the 28th at 5 p.m. with two such investors in Salt Lake City, John and Lisa. And they've been doing the work. And they're like, is it working? I'm like, have you noticed that it's getting easier? Yeah. Well, that's, it gets hard for a while and then it comes in like a tide and goes out. So I think one of the huge winners is One Rental at a Time Fans Community School, because again, we're not emotional. That's the beauty of 7%, 8%, 9%, 10% cost of capital. if everybody has the same cost of capital, we win because we're non-emotional. The other winner, just to round it out, is home builders. Home builders win for kind of a funny reason. They're not playing at 7%. They're at 5%, right? A lot of the big ones have in-house lending, and they're simply buying down the rate. Again, when we bought the house that we're in right now, rates were 8%. Trust me, I don't have an 8% mortgage, and I wouldn't have bought it with an 8% mortgage. I have a 4.99 mortgage. So again, I think investors and builders are the only winners. When I go over to the losers, right? We've talked about mortgage industry, a lot of pain there. Real estate agents, a lot of pain. Sellers. I think sellers are in for some rude awakenings. I think the want to and the need to it's going to be very interesting. Ty, you do a lot of training. This is what real estate agents and frankly investors should open up to. There's a lot of need to sell, right? Just think probate, think pre-foreclosures. There will be a lot of transactions and a lot of great deals, but there's also some people that have to sell in a difficult time.
Yeah. And there's also too, like with investors that, like as an example, we deal a lot with tired landlords and burned out landlords where, again, something you and I, we talk about from time to time is creative financing. Our good friend Pace Moraby, now more than ever, people thought like, oh my God, sub 2 and creative financing was so great over the last, let's call it from COVID with the low 2-3% mortgages. Well, what's better than a sub 2, 3-4% mortgage is creative financing where the person owns it free and clear. They've owned it for 20 years and they're sick and tired of the rent control and the, all the rules, restrictions, or the quality of tenant. Or also too, maybe they've also neglected their property and they've just gotten tired. And so they've got this fixer. They bought it for pennies compared to what the market value is now. They can also sell at a discount. Somebody who bought for $89,000, 25 years ago can sell it for $300 in a $500,000 or $600,000 neighborhood and still feel pretty victorious. So
yeah,
a lot of opportunity
coming. Yeah, a lot of it's creative. And again, let's talk about that. Let's say there's a tired landlord. They bought it 3 decades ago. They're out. They want to be gone. They own it free and clear, right? Bought it for 90. It's the neighborhood is 600, right? Some of those folks are going to take 300 cash.
Yep.
Right. They're going to look at their life. They're going to look at what else they have. And they're going to be like, getting rid of a headache is more valuable than a couple extra bucks. Yep. Some of them are going to go, I won't, instead of 300, why don't I take 450? Right. And I'll carry the note. And oh, by the way, some of them, because I bought them, nothing down. Yeah. I just want the note because I don't want depreciation recapture. I don't want to pay the IRS. I want to give this note to my grandson when I pass. There's just all of these amazing things. Those will happen. Those will become easier. That's why the investor, the hybrid agent, the creative finance, we will win in 25. We will win in 2026. You just have to have that belief. Right, Ty?
100%. And not only that, but I would say get around. I know if you're watching this video, listening right now, you're a part of the community. Get a little bit deeper involved, get involved in school, come to the Vegas event, really just plug in and realize this is the time. You said this a while back. We haven't said it in a while, Mike. I haven't heard you say it in a while. You said this, our time is coming. Our time is coming. Well, guess what? These 7% rates, like the buyer season, this now really shows this is the time we've all been waiting for as a one rental at a time investor. Buyer investor, this is our time right now.
Yeah, I think it's certain for the next 90 days. And again, this could go all of 25 and 26. I mean, seriously, this could be a 2-year run, right? And every day, every week, every month, it gets easier. The tide goes out, the tide comes in. The tide goes out, the tide comes in. And the tide is coming in for us right now, and it's going to be fun to see who's swimming naked, right? As Warren Buffett used to say. Matt, any closing thoughts? Yeah.
Well, as you were talking about it, I thought to myself, like, this isn't even my lane, right? I don't know a tenth of creative finance of Ty, but as a real estate investor and someone who's talking to investors, I hear so much of this. And so like, that's a clear winner in this market over the next couple of years is people that have the skill set, the knowledge, the contacts, the resources to put together these creative deals. Cause I feel like I didn't talk much about these at all with people. And now all of a sudden I'm just hearing stories. Oh yeah, here's how I structured this one in Arizona where I took over the mortgage and, you know, it's subject to, I've got this payment to the seller because they finance X% and I'm doing it as a rent by the room and I'm cash flowing $5,000 a month. Like blow your mind. The seller wins, the buyer wins, everybody, like those are the coolest stories. And unfortunately the mortgage broker doesn't win because I'm not involved in any of it, but I think that that's a clear winner too, going forward, just because like I'm seeing and hearing and talking to people more and more that are putting that stuff together. So
it's funny you bring that up. We actually have a guy in the school community, Jared, shout out Jared. I think he runs the Sunday accountability group, but he also owns the Rent by Room, right? We've created some additional categories. The group, school's growing so big, we're creating subcategories where other people can flex their muscle and show their expertise. And he's definitely showing that in the school.
Yeah. Jared O put on a masterclass on my live last week with the school community. And I was joking. I think I learned more than I taught during that 1 hour that we were, but the 20 minutes before we pressed record, because I always forget, and we all apologize to you, Zuber, on the video. But yeah, Jared, you know, super smart guy doing a bunch of cool stuff. And that's the great thing too, is like, whether you're an absolute beginner, never closed a deal in your life, I've done quite a few real estate transactions. I've been a part of 1,600 mortgahages. I'm learning new stuff from people in the school community, right? Jared taught me a lot. Other people involved in that, you know, mastermind last Friday were, you know, we're all just sharing best practices, learn from each other. So like, that's probably the other winner, you know, people who are involved with a great community like the one that you've got with One Rental at a Time are going to win, because all you got to do is pick up the phone. Hey, Ty, like, I think I got this creative deal, but I don't exactly know how to structure it. I already know who I'm calling once one of these comes across my desk that I'm going to personally try to go after. And so, you know, that's the people that are connected and have resources are going to win in 2025 for sure.
Yeah. Again, folks, if you want to get started, you want to see what's what in mortgage, greatmortgagebroker.com. Go there, fill out a quick form. He will be there to support you. Ty, closing thoughts?
No, this is just, I would say that I love what we do in this community. I love what you're doing, Michael. Looking forward to seeing everybody in February. It's one of my it's the favorite event now for me, only because it's so, it's an event where when I go to it, normally I'm there and I just give, and I'm sharing and pouring into people, which I always love to do. But this is also one of the events where I come back and my cup is full, because you guys don't know this, but you two know this. A lot of the viewer listeners may not know this. Like, I'll sit down with somebody who's brand new and they're doing things that maybe I haven't thought about for 10 years, or they just remind me of things, or they're doing things even better in certain areas. So I leave with my cup full, as well as lots of like, I'm going to adjust this, adjustments, pivots for myself and my own business. So can't wait to see people in February. The live event is epic, and love what we're doing here.
All right, guys. Thank you very much for doing this. Again, 2025 is going to be a slog, hard for lots of people, but not us. We are going to make lemonade out of these lemons. Guys, take care of yourself. Again, TY at TYLG, greatmortgagebroker.com for these two fine guys. Take care.
Thanks, guys.